Thanks very much, Jeff. Let's get started with the program now. We're going to get it off to a crisp start, pardon the pun, as we welcome John Cripps, Principal, Vice President, Office Sales and Leasing. He's going to give us his insights into the office market. John?
Thank you, Gary. Wow, 2009, what a year. The office market had negative net absorption of 418,000 square feet. To give you a historical perspective, year-end absorption has been positive in 8 out of the past 11 years. The annual average over this 11-year period was a positive 94,000 square feet per year, with the highest absorption being 456,000 square feet in 2001 and the lowest absorption occurring in 2009. In analyzing absorption, 7 out of the 10 submarkets we track recorded negative absorption, with the Keystone submarket tracking 48% of the 2009 total. Vacancy levels in 2009 were on the rise. We began the year with a vacancy rate of 18% and ended the year at 20.6%. You will notice that the year-end numbers represent the highest vacancy rate recorded in the past 11 years, with the lowest year-end vacancy being recorded in 1999 at 11.2%. Why is this happening? We believe it is happening due to businesses shrinking and businesses failing. This happened in both big business and small business sectors. As hard as that may be to hear, it is a true representation of what happened in 2009. Now, with that said, let me take a step back. Last January, I spoke to you about Indiana having true advantages. I noted these true advantages had much to do with the efforts of Governor Daniels, Mayor Ballard, and their economic development teams, as well as our prudent nature as Hoosiers. I spoke to the point that it is, and it would be, these true advantages that would better position our state and, in turn, the office market to compete during both good and challenging economic times. While no one in this room would disagree that we are currently experiencing challenging economic times, I do believe some of you may be surprised at how well prepared we are to move onward and upward as the economy ultimately strengthens. Indiana stacks favorably compared to the office markets in which we compete in the quest to retain existing jobs and attract new jobs. Indiana is the lowest with respect to unemployment, and we continue to trend in the right direction. The financial strength of our state is top shelf. Indiana is one of 11 states nationwide that can boast a AAA bond rating. In addition, we continue to be recognized by national publications for our advantages. A national destination for venture capital investment. #1 business climate in the Midwest, and one of the top places to live. Directly related to the office market, our prudent nature has also put us in a good position for recovery. During these difficult times, we have found landlords to be aggressive in securing occupancy, tenants protecting their futures by restructuring their leases and even extending term, and developers limiting new multi-tenant construction. Of the 3 points I mentioned, the one with the greatest impact for the office market in 2010 will be developers limiting new multi-tenant construction. Consider this. In 2009, 154,000 square feet of product was brought online. And in 2010, 2 projects totaling 78,000 square feet have been projected, giving a 2-year total of 232,000 square feet. When you compare this total to the 5 prior 2-year periods, you will see that the 2009-2010 figure is 2.4 million square feet below the most developed period and 1.2 million square feet below the 2-year average. We believe this is important because during the 3 previous downturns, our market faced both difficult times and an overdeveloped market, with limited new multi-tenant construction, and the current downturn being one that has primarily been affected by the consolidation of businesses and failing businesses. We believe that the office market will be able to realize better days as the economy strengthens and businesses experience growth. Note, in spite of the new multi-tenant construction activity being low, there was a shining star in the owner-occupied arena. Opus North Corporation recently completed the three-building, 320,000 square foot campus at 126th and Meridian Street. This was for the Capital Group companies. Turning back to vacancy. What kept the 2009 vacancy numbers from rising any further than they did? Deals. Here's a sampling of the companies that made space commitments to Central Indiana in 2009. These companies range in size from 30,000 square feet to 195,000 square feet. While this list is impressive, it is important to note that many of these deals were renewals. And while keeping existing companies in our market is important, the news gets better for everyone in this room when the major deals are new to the market. By new deals, we mean new companies leasing space and/or existing companies expanding. When one of these two events occur, the results will be the office market will add jobs. An industry standard would say that the office market would be considered a balanced market when the vacancy sits between 13 and 15%. To clarify, for the sake of this presentation, we have defined a balanced market to be the time when landlords and tenants are on equal footing in the negotiation process, not necessarily when spec development will take place. That said, to reach the aforementioned balance, the office market would need to add approximately 2.2 million square feet. To give you some perspective, that would be the equivalent of just over 3 One America towers. Assuming that 200 square feet is required for each office worker, again, an industry standard, the office market would need to add approximately 11,000 new white-collar jobs to receive what we would call a balanced market. That's a lot of new jobs. Good news is everyone in this room can help. Reach out to the companies that are located outside of Indiana that you do business with. Encourage them to consider Indiana for their future home. Think about it. New international airport, expansion of the convention center, Indianapolis Motor Speedway, 5 professional sports teams, active arts community, centrally located, and home to many upcoming major sporting events. Be loud and proud. Indiana is a great place to work, live, and play. Our 2010 predictions: rents will bottom out in late third quarter, early fourth. The rate of negative absorption, it will slow. Lenders will continue to become landlords. Cash will remain king. And 2010 will provide multiple opportunities for tenants, landlords, and developers who are well capitalized to benefit from the market conditions. We wish you the best in 2010. We ask that you stay positive and try to remember that good fortune tends to follow those who work hard. Thank you.
John, thank you for some great insight to get us started this afternoon. No question that jobs influence the need for office space, so there obviously is a real importance for all of us to participate with cities, counties, and the state to help attract and retain jobs through moves or expansions.